All right, today this is going to be a much longer video. Obviously, nothing here is financial advice. These all are just my own personal philosophies. I have been trading for a lot of years now, and I've been trading specifically automated bumper band strategies for a year and a half, coming on closer to 2 years now. And a lot of my accounts are definitely in the positive. There are some newer accounts that I am trading that are still in the red. And so, yeah, these are all just like things that I've learned along the way. This is just kind of my own general ideas and thoughts and how I keep my head on straight, keep emotionally healthy in this crazy environment we're in now. Whether it's a bull market or a bear market, there's always emotions to handle. And just because you are trading a automated strategy doesn't mean it's not going to be tempting to scale in too heavily at times. Like, your emotions are still involved. Nothing's easy. Nothing's a magic pill. And I wish I had known that early on, because the times that I lost money were when I saw something that looked too good to be true and just jumped all in with way too much capital and then got freaked out. And the decisions I made following that were the decisions that really cost me. There's a lot of back and forth and a lot of money that I lost early on, just not really having taken my time and gone slowly. So this video, I hope it's at least a roadmap. If you really are intentional and want to be successful trading, I encourage you to, whether it's following these steps or coming up with your own steps, learning about it, just go on that journey and take some time. Again, this is not supposed to be a quick fix. And if you are jumping into being a part of the bumper band strategies and trading them, just wanting to get rich fast, I promise you it is not going to go well. You got to just take your time. I've never, ever once seen it go well if the mindset was, I need to get rich fast. On the other side, there absolutely is hope, and there absolutely can be success to be had in trading. And I have worked for a long time to build these tools to help people come up and build their own strategies or tweak the strategies that I've posted and that I'm trading. So, all right, I thought it'd be nice to do a quick insert in the video and actually look over a couple charts, whether in the green or red. So what I'm doing is I'm actually looking at some real-time history of charts that I've been trading. And let's start with this one that's a loser. So just wanted to see both some winners and some losers. Pretty much all the losers right now are ones that I've been trading for less time, so shorter period of time, and are really low time frame charts. So this one is the SUI 5-minute strategy. I've been trading it since 11/17 till today. And it's funny because, I mean, it's definitely in the negative, but my account, because it's a 5-minute, it just has a lot more wiggle room for loss. And so you can see my account actually looks more negative if you look at the chart versus my account. My account is like down here. That's just because fees and exit prices are definitely worse. This is actually an account that I've been trading publicly and giving away some of the profits from the account. So it's basically, it has 3 strategies in it. I actually just added XRP to this account as well. I'm probably going to be taking away the Injective 30 at some point. I probably should have done it a couple days ago. Actually, I thought about doing it right back here, but it's wild. The Injective strategy I've been trading for, 9/29. That's when I started the account, and I've been posting about it in the Discord. And that one is literally basically flat. There was a time that it was pretty well into profit, and it was like almost 50% up. You can see it started 100. Took some losses, was down 25%, then up 50%, and now it's back down flat. So kind of par for the course, not even. The Sol 15-minute strategy has been doing pretty well. Again, kind of had some huge run-ups, and now it's up 71%, so can't complain about that. But that also started trading at the exact same time. And then the Bitcoin 30-minute strategy is up 92%. So doing super well. And let's look at the actual gains from trading a 10K account. So this is like a publicly traded thing. But 10K in account since basically October 1st, 10/1. So I've been trading this. It says 180 days, but obviously the first bit is just completely flat because I wasn't trading it. So if you look at this, it's actually pretty, profit is around, total profit's around 3,700. So that's 37% up in the account. And that was kind of, I took 3 strategies that were like, the Bitcoin one was less risky, the Solana one was kind of mid-level risk, and Injective was high risk. And You can see they kind of played out to that degree here, where injective kind of flat. If I would have stopped the account back here, would have been well in the green, but didn't. Solana, doing well. Then the Bitcoin 30-minute doing really great. So that's an actually live, just 10K traded account. A lot of these other ones I'm trading a little bit higher capital, quite a bit higher capital, but higher conviction. And so this is like the 30-minute Bitcoin strategy, last 180 days. Let's look at that. So yeah, I mean, pretty similar. I think this probably should start a little earlier, but pretty similar to the actual chart. Obviously, the chop is a little bit heavier, and that's just the reality of this. Looks real smooth. The actual Bybit trading chart looks a lot more choppy, and these moves have been a lot more painful. I think the other thing that happened is sometime in here, I had some cushion, so I started trading a little bit higher capital. Did better, and then it did worse. So, kind of par for the course since I put that extra capital in. This is another red one, injective 5-minute strategy. So this it says -6 in the red. That looks about right. Injective 5-minute, about what it should be. Okay, I'll just look at this real fast. This is the injective 30-minute on a different account that I did actually stop in a good spot. I let the 10K account trade, but I stopped this one. I've been trading this one quite a bit longer too. I've been trading it for a long time. It was very in the green, and I was like, just want to take something home. So I stopped the account. I think this is the Sol 10-minute right here. Yeah, looks about right. Looks pretty similar there. All those look correct. So the account's net up 15%, so not too bad. But again, it's 15% in 4 months. Not bad, but also not super great. If this was a bull market, it would have been a lot better, a lot nicer, but it is what it is. I don't think I didn't grab that from the Discord, but this is the Sol 30-minute strategy. This is one I've actually been trading for a very, very long time. And doing well, but a lot of chop recently. And recently I kind of also stopped this one. I was in the green. I just feel like Solana it probably will keep doing well. And on some different, so I have one account that's trading, what would be called? It's like percentage-based trading that I'm letting going, but it's that one I already took out my initial investment. I'm going to let that continue to go, but this is a little higher capital account. And the last one, we looked at Sui. Okay, so that's all of them. Yeah. All right, let's jump on in. The first and most important step is don't start trading too early. Unfortunately, this is always the way it goes. There's the most interest in trading in crypto usually when it is about to be the end of the crypto cycle. That's how it's worked from the beginning. That's how markets work in general. When everything's really boring in the market, no one is paying attention. If there's been a long bear season, people have gotten really discouraged. Most of the people that are interested in trading have lost a lot of capital and are burnt out and don't want to put more capital into the market. And that's, unfortunately, for most of us that trade, the hardest but the best time to start trading. And if you look at any of these strategies, when they started doing the best, when they have done the best, is obviously at the middle to actually later on in the bear. Really, I would say the beginning of the bull, but it's mostly consolidation. After a bear market, this is taking forever to load. Hopefully it'll load here in a second. But after every bear market is usually consolidation and general sideways. And so I have, just to clarify, I have the highest level of TradingView Pro. So I have 40K look back bars. So my charts will look a little bit different than your charts. Unless you have the highest tier, you'll probably have less bars look back. But you can see this is, let's see where this started trading. 2022 is where this started here. There was, still a bear market to go. And then there was just such a long period of consolidation from trade about 180, we'll say 180-ish, to trade 380 around there. So if you look back in the list of trades, mid-2022, and let's look at 380. So mid-2022 to the beginning of 2023. So that's a good 8 months of sideways. That's a long time of sideways. And obviously in that, the market was still kind of, really, I guess it ended the bear market at a little further down. It kind of, at 316, it really hit the end of it. But I would consider all this range in here consolidation. But even from trade 180 to probably trade 317 or whatever, This was still like the despair period right here. And then this from 300, because you've just experienced a large downside and it's going sideways, but everybody's expecting there to be. This is when Bitcoin was at probably 18K, 19, 20K, and everybody expected it to go down to like 5K even, but it bottomed out around, what was it, 16 or 17K here, around trade 317. And around that, people were still expecting it to go lower. And so all of this, people were just assuming the market was going to fake them out, start going up, and then crash down to 5K or whatever the narrative was there. So it wasn't until Bitcoin was trading back around 25, 30K that some people, the traders that had been with it, including myself, started getting really interested. Now, I did start trading some strategies around here, but I was super cautious about it. And I must admit, I was even pretty skeptical that it went lower. And, obviously the time in here would have been an incredible, incredible time because you can see the strategy just did incredibly well during the sideways consolidation. And you can tell and you can see that this specific strategy, when Bitcoin took huge runs to the upside, sure, it did pretty well, but Bitcoin started to really outpace it here. However, the strategy kept doing well. And if you had started trading anywhere in here, you would be so far well into the green by even this point that you are just, living great and doing great. So generally what I think about my own personal strategy is I try to not be trading heavily when Bitcoin is up. Like even right now, Bitcoin is at, near 100K. And, sure, could we go to 120K? Could we go to 160K? Absolutely. But I'm trading right now with extreme caution, and I'm only trading high capital on accounts that I'm in the green on because I can afford to let those take some losses. And so there's a trade-off, right? I'm going to be letting my strategies take some losses. Hopefully they're more contained than, and that's a good thing about trading strategies. They're more contained. You can see even here, like when back in the end of the bull market, Bitcoin, it took a lot more heavy hits than the strategies. The strategy over some months did absolutely take some hits, but Bitcoin took heavier hits going down. So the hope for me on the strategies that I'm in the green on is let them continue to trade even through until I'm absolutely sure it's a bear market, and then I'll probably turn some of them off. Maybe I'll let some of them go and just see how they do. But you don't want to be starting to trade high intensity capital when you don't have some kind of cushion, in my experience, in my philosophy. So that's kind of the first step. There is, don't start too early. Don't start with too much capital. And so that probably means if you're watching this video right now, you might have to take some time, and that goes into number 2. Realistic cost versus return goals. So something I think that's very important is that you are keeping track and understanding of how much subscriptions, all of these things are costing you, and how much your returns can be based on the capital that you're trading. Another pitfall that I see is if someone has, only 1 to 5K of capital to trade, they'll try to leverage it too high. Because they need to try to support this idea of like, I'm paying, what the subscription fees are. Maybe you're trading, I would just add them up, write down a sheet of paper, what your subscription fees are. So TradingView can be anywhere between 30 to, the highest tier are like, I don't remember, it's like $500 or $1,000 a month. Say you have a smaller amount of capital to trade, you're not going to want to be paying a ton for your subscription fees. So maybe start with something that's more realistic for you. Then you want to look at, so let's just put like TradingView here. You're going to be having some kind of key. And so the key that I have built all these strategies in is a skeleton key. If you don't have that, there is a link in the Discord to the skeleton key. And if you use that link, that would be awesome, just because it kind of gives me a little bit of kickback for recommending it, but it is the best tool to use, the framework to use when you're trading strategies. You're going to have some kind of, unless you hand trade it, which is also possible. This is the best automation tool that I found, and Eric Crown just has a great Discord, some great tools he built along with Agent Smith. So I recommend that, and that's going to be anywhere from 100 to 180, I think. Depends again on if you got a sale or when you get in, and you can always jump in and then resubscribe when there's a better sale. But that's going to be somewhere in there. Then you're going to look at the like Alertatron if you're using Alertatron or some kind of signaling service. That's anywhere from, I think it's the light version is pretty low. Maybe it's, I actually don't know. I'm just going to guess. It's maybe $15 a month to $30 a month. Depends on your subscription there. And then you have the bumper bands and whatever level you're in. So that can be anywhere, between 50 to 150. I actually am going to be releasing some higher tiers here soon. So, and again, based on sales and when you get in. So you have, on the low end, you have 30 plus 100 plus 15. So that's 155, 45, 145. So say close to, if you're on the like kind of the cheapest tier, that's going to be about $200 a month. And maybe you can find some ways to get in when there's really good sales on some of these and get that down a little bit. But I would say the lowest end is you're spending, $200 a month to highest, you could go up all the way to a couple $1,000s a month. Or, I mean, TradingView Pro subscription is real expensive. That's going to be the worst of it. But, say average, $450 a month if you're going to want to really have some higher level stuff in here, more tools, and then possibility of being a little bit more, what's it called? Generate a bit more profit. Sure, if you have some better tools, but at the same time, it doesn't automatically mean, say you're paying $450, it doesn't automatically mean that you're making better profit. So that's just something that you have to consider. I would say there's probably a bit better chance of it, but it's absolutely not always true. So just kind of figure out what you want to be spending every month, and then that's going to be an investment. So let's just kind of look at a year. And speaking of year, like you can get like the bumper bands way cheaper if you subscribe for a year and you want to be in it for a year, which is a great deal. I would definitely recommend it if you think you're going to be in it for a long period of time, or you can buy them outright. You can buy the skeleton key outright and just make a long-term investment. But so a total for a year, that's going to be anyway from 2,200, I guess 2,400 to what do you want to say, like 5,000. I'm just making some real rough estimates a year. So that means if you have, you're trading with a capital account of $5,000, that means you're going to have to go gain 50% in a year, which, it is doable, but I would say that's going to be, especially to automatically assume your first year you're going to gain a 50% profit, is unless you're starting at a great time. I would say that's a little bit unrealistic. Not to say that it can't happen. I'm just betting on like kind of worst case scenario. I'm betting that people that are watching this video are probably getting in a not great spot. That's generally just how it works. The market's hyped. And even you can see right now, the market over the last few months, I've had a lot of people subscribe. It's weird. I've had a lot of people subscribe right around here, and all they've seen now is chop and downside. It's just kind of how the market works. So that again is the same thing over here. I had a lot of people subscribe here, and over this period, so many people dropped out of the trading program, and then this happened right here because a lot of people started trading and expecting huge returns when they started trading immediately and got, chopped up and then were out, and all of a sudden this happened. And then people right around up here somewhere start getting, excited again, like, oh, I got to get back in it. And so this is just generally how it works. I don't know, like, listen, we could absolutely tomorrow, we could go to the moon, could find this again, but you can see these periods of consolidation tend to be quite a bit longer than we're at right now. So who knows? There's a period back here of consolidation that was a lot shorter. I'm just speaking in really, really general terms, but let's keep going. Okay, so I would just say use your first year as as a year of learning. If you can break even in the first year, great. Especially if you're trading a small account size. If you can break even in the first year, great. Maybe you can leverage your account at 2x. Again, none of this is financial advice. I don't recommend leverage. I personally use 2 to 4x leverage. Kind of depends on where I am, and I always have capital if I'm trading at 4x leverage. I have capital on the side that if the strategy takes some big hits, I can put back in the account. And I'll talk about that some more in the future. But kind of expect the first year your strategy to go sideways unless we just hit some really good times. I'm kind of trying to think worst case scenario. Say you play an average to not great hand at when you get in the market and all that stuff. Just like I think the first year of learning, if you can break even, that's incredible. That's better than most any other traders do. 99, what do they say? 95 to 99% of traders aren't profitable over a year or ever. It's just nuts. Okay, so the third thing to look at is find a combo of 1 to 4 strategies to trade. And this is really dependent on how much capital you have. If you have, 5K of capital, I would suggest 1, maybe 2 strategies. If I personally had 5K of capital to trade, I would pick 2 strategies, maybe leveraged at 2. If it's Bitcoin, maybe leveraged at 3, but that's pretty risky for me, because again, you're just leveraging up a small amount of capital, and you don't, if you don't have anything on the side. If I didn't have anything on the side, if I happen to jump in the market at a bad period of time, it's very easy to watch that 5K of capital go down by 10, 15, even 20%, or if you leverage it too much, 50%. And then all of a sudden you have way less capital to build from. So the recommended for me, if I was starting this from the beginning, I would take 10K of capital, put it into 2 to 3 strategies, or even better, take 20K, 30K of capital and put it into 2 to 3 to maybe 4, but leave some on the side. So don't put it all in the strategies, and we'll get to some of that in a minute. But just figuring out for yourself how many strategies you want to trade, and then going with that and waiting till you get some extra capital to add more strategies to it. So let's say you choose 2 strategies to trade. Then what I would do is I would look at the month over month. So these numbers here don't exactly represent the gains in the account. They do represent the general, if the month was green or red. The percentage it was green or red by is actually based on the months before it. So this is kind of a rollover kind of chart. And maybe at some point that'll be changed, but that's just the way the skeleton key does it. It's based on, month over month, what was rolled into the account. But it is helpful to know if the month was generally green or red, because it is going to be, if it's red, it's red. If it's green, it's green. So I kind of will look at, so January's here all tended to be green. February's a mixed bag. Obviously, this February is not over. This February could end up very well being green. We could see April and May were, I'm trying to look at based off of the year. April and May were on the lower side-ish. If I look at every year comparatively, or every month of the year comparatively. We got September, October. It's kind of a mixed bag, but December is a bit lower. So, but what we can see from this, at least in general, and the way I would actually recommend doing it is taking the time to go into the settings here and look at each month individually. So use the date range and just put a certain month in here. So say it's 8/1 to 8/31 of 2022, and then hit the date range. Or you can do deep back testing and look at further back months, and just like literally do month over month and write down the months, or maybe use some AI to take the list of trades and find a way to do that. But I'm not going to do all this work for you. It's just this is building a framework, right? So I'd try to find some strategies that weren't super heavily correlated. Generally, the bumper band strategies are going to be a bit correlated, though, because if the market is negative or really choppy, the bumper band strategies are general across the board not going to do super great. Maybe some higher term time frames will look a little different. So we've got like January being 0.82, February being -1. So let's go to a 12-hour strategy. January was positive 1, while February is only negative 0.037, 0.04 basically. So February, obviously a much smaller red month compared to January. Here it's kind of been going, I would call that pretty much sideways February. You can look at like April negative generally over the last 4 years. May a little bit more negative, June even a little bit more negative the last few years, August more negative the last few years. So this one's a lot more slow gains because you can see the positive and negative months. Generally, like 2022, which to be fair was a pretty choppy, bare and choppy season, was pretty much flat, small gains, but then got a little bit better gains over 2023 and 2024. And if these percentages actually are a little bit higher because of the way it's working in the chart. But I'm not going to get into that for now. It's do your own research on this. Just try to find some strategies that are a little bit less correlated. So that means for me, I'm looking at trading. I love trading the 30-minute Bitcoin strategy, and then I'll look at maybe doing a 1-hour short strategy. You can see here the January was a negative month, while February's been a positive month. Now these together is still net negative, but it's at least to me a little bit of a hedge. And I'm thinking that we might be going into a bear market at some point in the next 2 to 5 to 6 months, maybe 8 months. But whenever it looks like things are really going south, I'm going to scale much more heavily into short strategies, this being one of them. Right now, it's just a little bit of hedge for me. But maybe if you have a small amount of capital, you don't want to hedge. You're just going to if it was me, I might just kind of find a couple strategies, one that seemed a little bit safer, one that seemed maybe a touch more risky, and then trade those. Maybe you can do this. So this is the 1-hour Bitcoin strategy, long. You can see January, pretty big green month, February, a very small red month. So in that case, you'd be a little bit offset here in the sense, let's see what, if you add these together, where is that at? My 1 hour. If you add these together, you would still be net green. Let's see, 1.4 negative. That's just 1.4. I'm not even going to count that. February's basically been sideways. So 1.4 plus 0.82 is 2. Is that 6 or 2.2? That's 2.2. In the positive. -1 is, so you're 1% in the positive over these 2 months if you would have been trading these two strategies. If you would have been trading the 30-minute alone, you would be negative. It would be a small amount. Again, if you started at the beginning of January, maybe if you started in the middle of January, you'd be more negative. But again, we're kind of looking at longer term, and I'd say a month is even kind of a short period to look at. Think longer term. Try to hedge maybe a couple strategies. Another strategy that I actually just started trading at the worst possible time, funnily enough, I started trading this XRP strategy right around the middle of January, and that was right around here somewhere where it went positive for a few trades, and then it's net negative. So I'm pretty far in the hole on this strategy currently, but I'm going to let it trade for a little bit longer, and we'll see if I feel like it's getting too risky. I'll take it out and just take the loss, and that's part of trading, especially altcoins. Altcoins can just be really, really volatile, and this current season has been pretty rough for all altcoin strategies. So yeah, that's a general idea. I'm not going to do all the work for you, but I am just kind of bringing to your attention. Find a couple strategies to trade, and then the next step to that is stick to them and find the amount of capital. So that would be next. Let's see. I'm going to make this as number 4. So number 4 is a amount of dollars to start with, and then scale in. Okay, so what do I mean by that? I always recommend, or not recommend, I don't make recommendations because I'm not financial advice. I always, when I start trading a strategy, do not start with the full amount of capital that I want to trade in that strategy. I'll come up with a percent of my account, say I want to go into an altcoin a little bit, be a little bit more risky. I'll look at my amount of capital I have to trade. Maybe, so for me, I was in the green on a Solana strategy. I was trading quite a bit. So I took a little bit out of the Solana strategy, put it into XRP, and then I only started trading 30 3% of the amount of capital I wanted to trade on XRP. And so currently it's down, and I actually have not scaled in yet. So probably what I will do about now, it seems to be a decent spot. You can see -5%. There were some months that were -10, -7. So, but also some months that are -2. So I might take an average of all of these months. And again, this is not a great thing to go off of because these numbers are not really realistic. What I would probably do is put this into list of trades, export that, and then put it into AI and ask it to tell me month over month what it was, and then kind of find. You can even have AI help you find a average monthly drawdown on the worst months or whatever, however you want to do that. So I would kind of find a place to scale in another 33%, which for me, I'm actually going to do that here. Probably actually right now would be a great time to do it. I'm going to scale in another 33% and see if we get some bounces from here. I also might look at the just general chart of XRP. If it's at a spot that seems kind of like it might bounce, like is it at or near some lows over the last, kind of recent history? Sure, the recent history, the farthest low is kind of like, if you want to do the wick, it's 1.79. If you want to kind of do closures, it's more around 216. So could we come down closer to 216 again? Sure. The bull market could be over. We could go completely down from here. But it's kind of risk versus reward. I think we might be at a more kind of a midpoint. So yeah, scaling in another 33% here. Maybe if we get a drawback to closer to $2, I'll put in the last 33%. And then I'll let it go for a while, give it a chance to bounce. And again, this is just a small percentage of my full capital. So if that strategy ends up keeping, and like we break down from there, I'll take the loss. That's part of it too. And for me, I don't ever trade altcoins during a bear market. So if it kind of looks like it's going into a bear market, I'll just stop a strategy, give it some time, and wait to scale into another strategy later. And again, you have a kind of, if you scale out and you're at a loss, you have a reduced amount of capital to put into the next trading strategy, but that's also part of it. And hopefully other strategies don't, break down as much as altcoins do. So that's kind of just my general outlook for it. For any of these trading strategies, I will find places to scale in. Bitcoin currently, is this a great place to scale in? I would say no, probably not. This looks really choppy to me. Personally, if it, and unfortunately, this is, this chart looks way better than it really is. Like if we do this, let's do this. Let's go from, I'm going to try to find the worst period of time here just to get a more realistic expectation. And again, this would be something that I would definitely recommend doing. If you are starting to trade strategies, try to find the absolute worst period of trading in the last 5 years. If you go back, 8 to 10 years, volatility gets really heavy and crazy. So, that might be overkill to try to pick the worst of the worst from 10 years ago, but maybe in the last 5 to 6 years. So let's go 20. I don't actually remember where the worst period would be. I'm going to start with 2019 to 21, the end of 21, just to see here. So what I'll kind of do is let this analyze and then kind of look at the buy and hold, the actual chop, the actual drawdown percentages. Again, you can export the list of trades whenever this analyzes and look at it. Okay, so it looks like it's not too bad right here. What's around trade 100, and let's look at a trade 143 because that's going to be the best or the worst period to get in. Trade 143. So let me look in the list of trades. 143. Okay, so 2019, 7/12 of 2019. So let's go to 7. Let's go to 7/11 2019 and just generate up until now. Hopefully this won't take as long. But yeah, what I'm trying to do is find like kind of the worst period, and then I'm going to base my ideas of when to scale in kind of on that. Okay, so max drawdown says 19% now because max drawdown is very much based on what is in the account. And it's actually going to be worse than that if you would start here a few days later because this this gain right here to this loss, yeah, it's going to be, let's see what's happening here. So this is actually, the funny thing is this is actually choppy sideways. It's not even the, I don't know if that was a bear market or not, whatever. Just choppy period, which is kind of what we're experiencing now. So can it be realistic to what we're experiencing now? Yeah, maybe. And that's, a 19% drawdown, and you're not even getting in the absolute worst place. Now, what are the odds you're getting in the worst place? Probably close to the odds that you're getting in the absolute best place. So somewhere in the middle. Maybe your max drawdown isn't 20%. Maybe it could be 15%. That's realistic. And if you're trading with leverage, I've said this a lot in my last videos, if you're trading with 2x leverage, a 15% drawdown automatically is a 30% drawdown to your account. If you're trading at 3x, it's what did that be? 15 times 3, 45. Like, that's a huge drawdown in your account. Now, if you would have the guts to keep letting it trade, sure, would it have traded out of that? Yeah, absolutely, and gone on to crazy gains. Like 180% at 3x leverage is nuts. Like, maybe, you got real lucky and had the balls to do it and let it go. But regardless, that's a little bit of hopium. But I want to be realistic. So maybe when I see a 15% drawdown, I scale in another 33%. And we have not experienced a 15% drawdown here currently. I don't think. Let's try to find the worst case recently. I guess it'd be here to there. Let me just do this. Okay, so say you saw a 10% drawdown in the account at some point, which this would have been trade 33. Let's see when that would have been exactly. That would have been, January. So basically beginning of February is when we saw the account go down by 10%. That would have been a decent time to scale in. And you can see if you would have scaled in right here, you would have put a little bit more capital in. So you actually have the account right now is higher than it was at the worst case. Maybe, it kind of retests these lows. Maybe it goes back up. But at least it's a decent place. That's probably around here. That's a decent place, in my opinion, for me to scale in, because we've hit some downsides. And then I have another 33% to scale in if we hit some even worse downside. And hope that then if I let that go for another couple months, I have now 100% of my allocated capital trading in that account, and I've scaled in as it's gotten some big drawdowns. Now I have a much better chance of being in the green than if I would have scaled in 100% right off the bat. Now, the other side to that is maybe you started trading in an average time, which is probably more likely. Maybe I started trading my account right here or something, and then all it's done since there has gone up. Then it has a pullback right here. As you can see, this is where the first pullback happened. Then maybe there you're like, hey, I have a cushion. That's another way to scale in. I have a cushion of capital. Now I'm going to put another 33% in. Now the downside of that is maybe you started trading here, and it went up, and you saw this. You saw this first. Let's see, where would be because this is happened to me. I guess it's not on this account, but there's been times when it's gone up and I've scaled in on the first pullback, and then it's pulled back more. And then say I scale it in here and it pulls back a little bit more. All of a sudden, I'm trading like 3 times, or it's to be 66% more capital, and they've only experienced pullbacks. So my 33% cushion is now experiencing way heavier drawdown. So I've absolutely had accounts where this graph was not really representative of what happened in my account because I scaled in. And that's the danger of scaling in. Or scaling in at bad times is a lot of people tend to scale in only when when the market's kind of at its worst. So maybe you started trading back here and you scaled in, you doubled or tripled your size up here. All of a sudden, these pullbacks are going to be pulling back on 100% of your capital instead of 30%, and now you might be flat or in the red again. Again, that's a part of trading. That's a cost of trading for me. It's the price of being safe and taking your time. So, some people might just say, hey, I'm going to trade 100% of my capital and be willing to take the losses. That's another way to do it. It definitely is a bit more ballsy way, and you're going to have to, I think I actually have been talking with a trader that started trading here, and they started trading 100% of their capital, and all of these losses have been massive. They've really hurt because they've been trading with a high amount of capital. If that would have happened to be a better spot, they would be trading 100% of their capital and be well in the green now. Again, I'm just trying to set a realistic expectation. So it's up to you what you do. I personally like to scale in. That way I have a cushion on my account. And sure, might mean that my account takes extra long to be in the green because I've, been safe. But again, I'm kind of considering how over the first year of trading my strategy, do I be a little bit in the green, or maybe in a great case, maybe I double my account over a year. Then even I could take my original investment out of that account. I could let the rest trade, virtually risk free. So those are the kind of things that I'm thinking about when I scale in. It's up to you, but I would take time, write down your plan of how you're going to scale in, when you're going to scale in. If you want to be a long-term trader, if I want to be a long-term trader, I need to absolutely do that. Okay, last thing to look at here is when to take profit. And by profit, I mean actual money that's out of the trading account in the bank. Because if it's in your trading account, it's not profit to me because we've seen so many exchanges over time just collapse. So unless the money's in the bank, the other thing to consider is, or that is a temptation, is if the money's in the account, there's a temptation to put it back into strategies, and that at that point it's not really profit to me. You're using it as risk again. So profit is something that you're actually spending on other things besides trading or have in your bank account. All that to say, when do you take profit? That is totally up to you. Personally, I take profit a little differently in different seasons. So, for example, I started trading a altcoin strategy, a year and a half ago. As soon as that, and that was kind of one of the earlier strategies I started trading. I started trading at a pretty decent time because I started trading in this consolidation and really where the market started to go up from there. So that account doubled. I took the original investment out, and then I let the strategy go from there on. I think it's quadrupled by now, and I just took a little bit more out of the account. But I at least have my original investment out of that account. So that's one way. The other things that I do is like in other accounts, like if they're trading not on a percentage base, and actually that's one thing I should probably address here in a moment, is I might just wait until I've had a couple green months or something like that. I'm not going to give you my exact because they're different, but yeah, for a Bitcoin strategy, I just waited. November, I took a little bit out. December, I took a little bit out. In January, I took a little bit out of the account that was trading, and it was actually Bitcoin inverse perpetuals. And inverse perpetuals means that it's holding Bitcoin as collateral, changing it into Bitcoin versus USDT for the trade, and then converting everything, the gain or the loss, back into Bitcoin. And so you're slowly building your Bitcoin account up. So I'll let that go for a while, and then I'll actually sell some Bitcoin out of that account and turn that into USDT, and then put that back in my bank. So that's one way I'll do it, is just every few months, kind of take a little bit of money out of the account. What was I was going to talk about? Oh yeah, percentage-based trading, and I talked about this in a recent video, but I want this to kind of be an all-in-one video. The other thing to look at when you're trading, and some of the explanation of how to do this will be in other videos, but I do like trading percent of equity accounts on some accounts. And so what this does is, if you have, say you're going to trade at 2x leverage, which means you're trading at 200%, which really technically I don't ever do the full. I do like 190 just to leave room for fees and stuff. You're trading at 190%, and when you're looking at this, you're going to want to put in the margin as if you're trading 200, so that would be 50% margin. This is kind of how the math works. So if you're trading at 2x leverage, you divide 100 by 2, which is 50. 3x leverage, 100 by 3, which is 33. 4x, 25. So this will let you know kind of when and where you get liquidated if you trade at too high of leverage, which is kind of important to know if that will ever happen. Now, it's really hard and kind of impossible to get liquidated on percent of equity accounts unless your percent stop loss is too low and get hit. So say you're trading at 5x leverage and your stop loss is over 20% away. If you have over 20% stop loss, so say price drops over 20%, that's the only way you get liquidated in a percent of equity account. None of this is financial advice, so do your own calculations in there. So when we look at this, all of a sudden, trading over a 4-year period is way, 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 way more profitable, and the max drawdown is not bad at all. That's because when you tend to start having drawdowns, what happens is your account, each time a loss is hit, your next trade is trading a smaller amount. So as more losses get hit in a row, your account is trading less and less capital, so it's risking less and less, if that makes sense, as opposed to always risking 10K every trade. Even though your account size gets smaller, that means your risk is actually going up. If you don't understand that, take some time to research it, but that's kind of the way it goes. Now, this is very unrealistic, in my opinion, unless you're going to let a strategy go for 4 years without ever stopping it and hope that the strategy does as well as this one did. And again, like something that I might not have said in this video, but I believe is past strategy returns are not at all indicative of your future returns, which means it's real great and easy. Not easy, it's pretty hard, but it's real great to see a strategy just trade super well. In the future, as we can see here, this volatility right here is way worse than any other volatility we've seen. Now, that's also because we're trading at a percentage base. And so up here, now your trades are, let's go to the list of trades. Your trades at the beginning were contract-wise 0.21 Bitcoin. So your profit and losses are much smaller dollar-wise. And now we're trading 0.86. So you're trading like, what is that, 4? Yeah, it's like 4 times more contracts size. So these losses are going to be way bigger. So the reason I would never let a percent equity account go for this long without taking profits out is because all of a sudden you're going to be risking so much that you could easily cut your account in half pretty fast eventually if things go really bad and your account goes south. So what I would do, if I'm trading a percentage base, which I am in several accounts, is I will wait until the account goes up, whatever. I'll just write it down on a piece of paper. This is kind of what my game plan is. When it goes up this percent, I'm going to take this much capital out. And then, so you're kind of slowly resetting the account level. And so something like this would never happen. Now, the net profit would never look this big, but your drawdown is going to be, hopefully, unless it's a real bad, your drawdown is going to be better, and you're not going to come to a situation where you start losing like 50% of, or like huge numbers that you could easily have taken profit on. All right, so that's kind of, watch some other videos. I think I addressed this a little bit more in some other videos, but this is something to do research on, like when to take profit. I'm actually going to put this up here. Percent of equity versus set contract or dollar. And these, and set contract and set dollar amount, are also something very important to keep track of, because if you're doing a contract size, this happened to me on a Solana chart. I don't have it up here, but what would be one? Maybe an XRP. Yeah, XRP would actually be a great example of that. So say you're trading on contract sizes. Okay, so back here, XRP was like, what is it, closer to $1, or, way down here is much closer to like $1 or somewhere around there. So say you're trading 100 contracts, which means about $100 here. All of a sudden, say you've been trading it and you've got kind of been going through these ups and downs. All of a sudden, when XRP goes up here and is trading at $2 or $3, all of a sudden now you are, in dollar amounts, you are risking 100% more in just a matter of days. And when it has these pullbacks, you're going to experience way worse losses here. And let's see if I can make an example of that. Yeah, actually that would be, so say you're trading at $1 here. So all of these, you're going to want to kind of monitor your account. Yeah, so what used to be in dollar amounts, if you're trading in dollar amounts, what used to be a 15% loss here, or was it 10? I don't remember what it is. Let me look at it real fast. USDT. So right now we're on 32% drawback. When you trade it to USDT, you're at a 16. Yeah, so you're half. So say you're your chart is on USDT, but you're actually trading, because unless you're trading perpetuals or inverse perpetuals on XRP, which XRP does have inverse perpetuals, but I don't think very many people trade them. And I personally don't trade it because I kind of want to get back into USDT. When you're trading contracts, yeah, you're just going to have way more swings in volatility, and it's going to be a lot more dangerous as price goes up. So say you're trading at $1, or I was trading at $1. Once it went up to $2, what I would personally do was actually take down I would go into the skeleton key, down to the API settings, and I would take my contract size down. So I wasn't at their highs, I wasn't risking even more capital, which is the absolute worst you want to do. Like when a chart is at its peak, you don't want to be risking the same amount or peak capital. Hopefully this makes sense. My brain's getting a little foggy, but basically trading 10K down here, up here, now you're trading 20K, and it has way more chance of pullback because XRP and any other altcoin, once it goes on a massive run, what's going to happen after a massive run? Usually pullbacks. So all of a sudden your pullbacks are happening on double the account value, the contract value size. Hopefully this all makes sense. Yeah, I'm getting real foggy in this video, but that's the idea. When you're trading versus based on contracts, really take your time to understand what that means and think about, let's see, like for me, when, what would that be called? Asset price goes up, I decrease, oh my gosh, wow. I decrease amount of traded. Man, I need some food. All right, so this is just a philosophy for me. When the contract's asset price goes up, I'm basically trying to keep, if I'm looking at a chart and trading a chart based on dollar amounts, which all of these are, normally they're, when I was first set it up, it was based on dollar amounts. I will try to make that more realistic in the trades by actually trading the same dollar amounts. I wish there was a way in Alertatron to trade the asset versus USDT pairing in the dollar amounts when it wasn't inverse perpetuals, but I don't know of a way to do that currently. So that's just something to kind of keep an eye on if you're trading an account that the contract size all of a sudden goes up. And yeah, okay. I think that's everything here. If I have any other thoughts, I might come back and add them later or make a second video. But this is just hopefully setting a realistic standard for, not trading in and not expecting your account to do something that it might not do. I'm saying this from experience because I've had a lot of users start trading at really rocky periods of the market, or scale in, or maybe they're old users that saw huge gains and then scaled in a ton of money here, because that's generally what happens, right? This is how the market works in general. You're way more likely to invest, or you're way more prone to invest, at least I am, emotionally, when the market looks really juicy and really great. I'm like, oh, I need to put more money in that. And again, that's kind of the same thing. It's when the market is at its highest, when the contract price is at its highest, it's more likely to pull back. Just in my experience. So let's be profitable over the long run. That's my goal over years, months and years is my goal. I don't want to be profitable. I mean, sure, I'd love to be profitable in days or weeks. My goal though is months or years. And anytime I've had that perspective, I've been way more likely to actually be profitable in the accounts that I'm trading. On that note, I'll leave it off here. We didn't look at some of these other ones. There's so many strategies on, I guess I'll leave it off with this. There's so many strategies on the Bumper Bands Discord. I'm almost tempted to delete some or take some off, because there's very much a paralysis that can happen when you look at all of these strategies. What I would say, the only other thing I would say is think about lower term time frames. You can see that lower term time frames have way better gains when in the bull periods and way worse losses in the sideways or bear periods. So it's very important for me. I'm trading a 10-minute. I'm actually trading some 5-minute strategies. Um, and the other thing I guess I forgot to mention is make sure your commission is very realistic. Um, Say that your commission for your actual account is 0.6. I would at least put your commission at 0.9. Which is going to make this strategy not profitable for you if you're going to have that. So my commissions are quite a bit lower than 0.6, but I, multiplied it by like 2 for me, just because I want to make sure that my average trade is going to actually be profitable. But if I put this on 0.9, say your average trade or your commission is actually 0.6, say you're using Blowfin and you have the link, which I'll get a link for some better commissions on Blowfin. Let's look at the actual realistic thing that happened here recently. Again, this has been in the last video, so this is old news to some people, but yeah, all of a sudden your average trade is 0.03, and which to me is not even worth trading. Like I would much rather put my capital in another account that for the last, it's barely up 6 months or 6%. And really, if I had started trading anywhere in here, it's going to be massively down. Okay, so I don't want to trade a 10-minute if my fees are too high. I will say there are some if you want to trade some lower time frames, or if we're in a bull market, I trade the crap out of some lower term time frames. Like 5-minute Solana has crushed it for me. 15-minute Solana has absolutely crushed it for me. 10-minute Solana has absolutely crushed it for me. 10-minute Bitcoin is doing well. My account's up it's like 10% maybe. But I started trading it, at a fine time, not a great time. And I have decent fees. But there are absolutely some lower term time frame strategies that if we are going into a more of a bull market, 100% worth it. And maybe just a plug for the ultimate tier. There are some new indicators I'm going to be putting out that are only part of the ultimate subscription. And I'm really trying to keep my prices like affordable, like compared to the fees that are out there on everything else. My goal is generally to grow the Bumper Bands Discord to maybe 100 people. And then after that, if you're new to it, the prices are going to be a bit higher. That's just because I want to maintain these strategies, keep the value in them, and not, if I have too many people trading the same strategy, it's going to affect it a little bit, especially if it's like a 5-minute strategy at some point. If you got tens of millions, $100 million trading the same 5-minute strategy, it's absolutely going to affect it a little bit. I have not seen that happen yet. I don't think we're anywhere close to that, but I'm just trying to keep value for users, especially users that have been here for a while. So all that to say, there's going to be a lot of new indicators and strategies I'm adding here soon. The price is going to probably go up for the Bumper Bands. And there will be sales here and there, but yeah, generally I would just kind of keep that in mind. Just putting a lot of work and time into this and want it to be valuable for everybody here. So, okay, on that note, and let's leave it off from there. This is the last thing I didn't show. I'm working on some trending strategies, basically. I don't remember where that was. Maybe here. No, that's a 4-hour. This one. I'm working on some trending strategies that I'm stoked about and will be incredible for bull markets. Actually, it's pretty cool to see that year over year, it's always been positive. Now, there have been absolutely like long periods of time where it's been no trades, no gains, or in the negative. But that's a trade-off here with more of those kind of strategies is the drawdowns will be a little bit more controlled, and the wins will be way bigger. Like the average trade is 2%, which is just massive here, and even kind of this might be. I'm gonna try to post this soon because it hopefully will be a decent time to start trading some of these trending strategies. But that's another thing that I'm kind of looking at here. So, all right, with all that said, I hope you guys have a great day. Stay safe out there, and I'll see you guys next time.